the key here is to just say no, because they need everyone to say yes for adoption. And if a big chunk of the population, let's say 15 to 20% say no, it's going to be very hard for them to do it. Wednesday, March 29th, 2023, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at how we can make sure that CBDCs never come to fruition, and it's a very simple solution. You will be surprised, but there are strategies as well that we need to use, in my opinion. This is just my opinion. I'm just trying to give my 2 cents here. Before I start, I like to say I just created a new playlist for the channel. It's got 7 videos in there right now. It's the Clive Thompson interviews. I recommend, if you haven't watched Clive Thompson yet, I first interviewed him 4 months ago, back in November, and we spoke about the currency reset will wipe out creditors and usher in CBDCs, part 1. It's probably the most viewed video I've ever made. I think it's got over 500,000 views. I was surprised that it did so well. Clive had never done an interview before, and he had connected with me through LinkedIn. He writes some interesting articles there in LinkedIn, and I actually contacted him and said, do you want to talk about what you wrote about the Fed? And we talked about currency reset as well. And I'm not saying that this will happen, but a lot of what Clive talks about is a possibility. But anyway, hopefully this playlist will increase. I think Clive likes coming on the channel. But back to CBDCs and why I think there is a way to prevent the central banks and governments, because they're working together. Don't be fooled. Central banks are not independent of the government. They work, basically they run the government. Meyer Amschel Rothschild, back in the 1800s, once said, give me control of a nation's currency and I care not who writes the laws, right? So that's where we are right now. I'm not saying there's a Rothschild at the Bank of England, but that philosophy is ingrained at the Bank of England, at the BIS, at the Federal Reserve. And I would say all central banks around the world, they want to centralize everything. They want to control every penny you spend. They're going to program your wallets. Yes, the Bank of England is looking to outsource their wallets. So they say we will have no access to your data or your transactions. Yes, right. But yeah, I think it's very simple. And what is the solution? Well, it's to just say no. And the reason I'm talking about this today is because yesterday there was a really good headlines, good news here, and the Telegraph is talking about it, but it probably came out in other places. It says NHS COVID app behind Pingdemic to shut down. Yes, the COVID app is to shut down. I first saw the story through a tweet from Jennifer Arcuri here yesterday. This was never going to work, never. And I retweeted and I made a comment. The same should happen with hashtag CBDC. We just need to say no. I never uploaded the COVID app, and now I'll never upload a CBDC wallet. Yes, I never uploaded that COVID app because I knew or I thought that it would be a control mechanism. And the other thing I never did is take one of those tests that so many people took that really made their lives miserable, or maybe they enjoyed not going to work and being at home and getting paid by the taxpayer, by themselves. They're just borrowing from the future, and that's why today we have an economy that's collapsing. We have inflation out of control. It's a big part of this is this COVID app. So let's quickly go through this article in the Telegraph to see what they say, of course. And then I'm going to give you some strategies and talk about how they might try to usher in the CBDC. So, app caused chaos in summer of 2021 when it alerted millions of people to self-isolate. The NHS COVID-19 app behind the controversial Pingdemic is to be shut down next month. The digital contract tracing service, which crippled businesses and forced millions of workers into quarantine, will stop working on April 27th for lack of use. There you go. I wish people back then had not used it, but as we've seen with the lockdown files, the government had a deliberate strategy of scaring people to death so that they would do these things, so that they would destroy the economy of this country, which hasn't recovered and probably won't recover for at least a decade, I would say, unfortunately. The app, which was launched in September 2020, allowed people to register positive COVID tests. There you go. I had read about these tests. The man who created these tests said that it was not appropriate to determine whether a virus was infectious. So I knew from the get-go that this was just a big, yeah, I don't want to say it starts with S and C. We're trying not to get censored here. And then would notify recent contacts about possible exposure to the virus. Those who came into contact with a COVID patient were pinged and told to isolate. I'm not going to go through the whole article. It says here, at its peak, the app was alerting more than 500,000 people each week, and that they should stay at home, bringing the economy to a halt. This is quite funny here. Confirming the app would stop working next month. The government cited studies, right? Always these studies. It had prevented around 1 million cases of coronavirus. Experts at the University of Oxford and the University of Warwick estimated the app stopped around 44,000 hospitalizations and 9,600 deaths during the first year of operation. Yeah, right. How do they know that? And yeah, people wake up. This is just it was a scam. And CBDCs are going to be the same thing. How can they bring CBDCs about? How can they scare the public into submission in order that they accept a central bank digital currency, in order that they accept to download a wallet into their phones or into their PCs? Well, it would be a few ways. I would say it would be a cyber pandemic that wipes out a lot of banking operations online. That could be blamed upon the Chinese or the Russians, and they could come out and say all the banks, all their funds have gone. The Russians have it, or the Chinese. We're going to have to issue, your bank has gone bust, we're going to have to issue these CBDCs. So that way it could go. Or the other way, of course, is looking also fairly likely. It's a complete banking collapse, which would not be a surprise, seeing that the system is so leveraged, so, indebted up to here. And we saw some taste of that, foretaste of a collapse back in September, October here with the gilt market and the pound collapsing almost to 1-to-1 with the dollar. Defined benefit pensions basically coming within a whisker of being wiped out. And we've seen recently with the failure of Silvergate Bank, SVB, Credit Suisse. Yes, it was taken over, but it would have failed. First Republic. And it's not over yet. So they could wipe out the system like that. They could even have the too big to fails collapse under the weight of all the quadrillions in derivatives. And their excuse would be, oh, we're going to have to use a CBDC. So you might be thinking, what can we do if that happens? How can we fight the CBDCs? Well, buying and selling things is basically exchanging value for value. Of course, nowadays in this world of fiat currency, the currency is losing value at a rate of knots. So it's not a really good store of value. But barter, I would say, is the way forward. And that's why I've been stacking not just the bullion, silver coins and gold, but also the old coins. And no matter where you are in the Western world and even some other countries, if you look at the history of your money or your coins, a lot of them had silver and gold up until sometimes the 70s. Some of the currencies had silver in them, some of the coins, and even in the 60s, it was prevalent up until World War I. Many people used the coins or gold. Money was gold and silver. So what I've been doing is stacking these. And for example, I've got this crown from 1890. It's a silver sterling crown, right? And it's got Victoria on the back. And I would say you could get purchasing power of around 20 to 30 pounds with this. And it might seem complicated, but when there's a crisis and you need to exchange things for food or whatever it might be, fuel, cigarettes, or toilet rolls or whatever, this could come in handy and people will recognize it here in the UK. Or a 5 Belgian franc piece that one of the viewers sent to me from the 19th century. That might be recognized in Belgium or even in the Netherlands. What else have we got? Yeah, one of my favorites, the $1 Canadian, I think up until 1967 was 80% silver, so you could use that. For my viewers in Australia, you got like a florin from, I think this is 1927, the commemorative florin with the Parliament House, the new Parliament House. And yeah, this is sterling silver, and it's about like $1/2. It's, I would say, half the size, maybe a little less than the crown. And what else? We got half a crown in the UK. You could use that too. In Switzerland, for my viewers in Switzerland, you've got a 1954 5 franc. That's, I think, 0.83 silver, and so on. I mean, I think silver coins like that, the old coins, will come in very handy. You even have for very small transactions, you got a threepenny bit here from the UK, 3 pence. So it's similar to a dime, a silver dime. The other thing I would say, the other strategy to have is some of the legacy cash, some of the cash that we use today. And by cash, I mean the paper or plastic notes, whatever you might have in your country. Here now we have plastic. What about gold? Well, gold is a lot more valuable in terms of purchasing power, I would say, at least now. Maybe silver will catch up. But for example, if you needed to, I don't know, and I think it might become even more valuable, if you needed to do a larger transaction with someone And we've seen recently Marco from the ARC farm in Arkansas. I interviewed him about a month ago, and one of the viewers and followers of the channel drove to Arkansas, I think from Oklahoma, to buy 200 pounds of beef from him, and he paid him with an ounce of gold. But who's to say that when we have a crisis, this will buy more like 400 pounds of beef? And what I think could happen in the beginning is the exchange rate between, let's say, gold and beef and whatever, fuel, is going to be different in different places. But the more we use these means of exchange with real money, gold and silver, people will arbitrage the differences, and eventually people, the value will be set. In the beginning, yes, you might think, oh, I lost out, I could have gotten a lot more, but that's the way it works. That's the way the market works. Prices are not perfect. Exchange rates are not perfect. And then you also, for gold, you might say, well, that's too much to carry around an ounce of gold. Well, that's why you have a sovereign, which is just under a quarter of an ounce. And in every country in the US, they do these quarter ounces, or like the old circulating dollar coins as well. You've got the 20, 10, and this is more like, I think, the $5 piece, which is around a quarter of an ounce, and then a half sovereign. A half sovereign, for example, is worth maybe around 200 pounds. If you could go and, I don't know, have a nice dinner at a restaurant that would take this with your partner, your wife or your husband, nice dinner with wine, and you could pay with one of these. So there you go. That's the way I see it. It's common sense. It's very simple. Do I think that we'll be able to do this to really fight the CBDC? Well, I hope so, because I wouldn't be making this video and trying to give my opinion on it and how we could fight it. And yeah, I think the key here is to just say no, because they need everyone to say yes for adoption. And if a big chunk of the population, let's say 15 to 20% say no, it's going to be very hard for them to do it. And I think you should boycott businesses that only accept CBDCs, or even now you should boycott businesses that don't take cash. And it's weird, because even the businesses that pay cash, they're pushing you to use the cards. I went to play golf last week at a different golf club. I'd never been there, and I went to buy a few things in the pro shop, some drinks to take with me on the course. And the guy in the pro shop, he, I bought my things and he added them up, and he started putting it on the card reader already. And I said, don't you take cash? He said, yes. So I said, why are you like pushing me to pay with a card? So he said, oh, no problem, you can pay cash. So that's what I'm trying to say. They're already pushing you to use the card, even when they accept cash. And I think we should say no and try to use cash as much as possible. And I have to admit, I do use the card sometimes. So with that, let's quickly look at where the markets are this morning. It's just before 8:30 a.m. London time. We saw a good recovery in the precious metals yesterday after they sold off the day before, or on Monday. But one thing I've been noticing is that the miners that I have, gold and silver miners, and also some commodity stocks, they've rebounded very well. My portfolio has actually gone up quite nicely compared to the bullion price, and I think that's a good sign. It means in my opinion, that bullion, gold and silver prices could continue higher. Right now, though, we're seeing a little bit of a correction down here. Gold is at 1962, is down about $12. Nothing serious, really. The low has been 58 and the high 75. Silver is down about 1% or 22 cents at 23.10. Low has been 03 and high 38. To the stock market, we got the Dow futures up 0.5% or 177 points. NASDAQ up 0.9 or 113 points. And the S&P 500 is back above 4,000. It's up 32 points. We'll see how long this lasts, this recovery in the stock market. To the currencies, sterling is down 0.1%, 123.26. We've got euro also down 1/8 at 108.31. The dollar is up 0.75% versus the yen at 131.85. And the dollar is up 1/8 versus the yuan at 688.86. Aussie dollar is down 0.5% at 66.75. The dollar is up 0.1 versus the Canadian dollar, 136.10. And the Kiwi dollar is down 0.25% at 62.34. To the general commodities, platinum is down $2, trading around 963. WTI crude is up just under 1% at 73.87. Brent is up 0.2% at 78.59, and high-grade copper is down 0.2% at 406. We'll finish off with the U.S. Treasury market. Overnight, the 10-year yield is unchanged at 3.56. The 2-year is also unchanged at 4.06. So with that, I'm going to wish you all a very good day. Take care. Bye.